Inflation, that's the other thing. Oh my God, inflation's coming back. It's going to be the 70s again. I know. I hear these narratives from you guys because I see it all over Twitter.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul is a friendly crypto enthusiast. We'll share how to spot real opportunities, navigate market twists, and highlight upcoming trends. Tune in to explore these fascinating insights and uncover more.
And I just hear these voices. I'm like, where are you getting this from? I don't understand. You're listening to some random crappy macro guys, never run a portfolio, telling you something. And you're like, see, he said it. He said it. Inflation's coming back. We're all going to lose money. I get it. We've all got our net worth in this entire fucking trade. We want it to work. Please, 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 just focus. So, wages. Wage tracker growth going lower. Therefore, we will not see wages increasing for a while, if at all, depending whether AI breaks it entirely. Ain't concerned about that. Oh, home prices. Well, home prices are a massive drag because there's a 17-month lead. So home prices will be bringing down CPI shelter, which is the largest part of CPI. If the largest part of core CPI is shelter, it ain't going up. When rates go down, guess what? Owner equivalence rents come down, and that drags down CPI. Look at the Cleveland New Tenant Rent Index, 3-quarter lead. It's puking. It's gone below zero. There is no inflation, my friends. Let's take away shelter and look at all items less shelter, because shelter's the lagging one, 1.9%. I mean, really, dudes? And then we'd use the Mount Fuji chart of truth that Julian and I have been using forever. Like, we take all the inflation episodes, the major inflation episodes, compare them to this one, and guess what? Inflation's coming lower. So we will get cyclical inflation later in the thing. There's nothing structural. We're not going back to the 1970s. None of that's going to happen. Literally none of that's going to happen. Tariffs are not inflationary. It wasn't inflationary last time. It won't be this time. None of that is going to happen. It'll just be a pretty ordinary cycle. So that tells me dips are for buying. The cycle top. Again, all the fucking noise on X. The cycle top is the top. It isn't topped early. Oh my God, it's the worst. I'm so scared. I'm so scared. We're nowhere near. The core risk indicator. Are we overbought? No, nowhere near. Bitcoin valuation model. Are we overvalued? No, nowhere near. Let's have a look at it versus the 2017 cycle. Are we near the top? No, nowhere fucking near. Are we going to follow this exactly? No. Are we going to do decently based on this? I think so. I think it's going to rhyme more than people expect, and we will have a stronger cycle than people expect.
Bitcoin remains pinned below the $100,000 threshold for a seventh day, yet optimism persists. According to Derive's head of research, Dr. Sean Dawson, the probability of Bitcoin reaching $125,000 by late June now stands at 44%, rising from 42%. This climb appears driven by traders who continue to wager on a breakout. Meanwhile, the likelihood of a drop towards $75,000 has slipped to 12%. BitMEX co-founder Arthur Hayes remains cautious, suggesting a possible dip to $70,000, $75,000, yet his forecasts have not dampened bullish sentiment. Bitcoin currently trades near $96,790, according to CoinMarketCap, and has stayed below the psychological $100,000 marks since February 7. It briefly peaked at $109,000 on January 20, just before the inauguration of Donald Trump. That milestone built on a November surge, when Bitcoin hovered near $75,000 soon after Trump's election victory. Many analysts view that period as a catalyst for the rally that carried the leading cryptocurrency beyond $100,000 in December. Analysts caution that choppy conditions may persist unless Bitcoin reclaims six figures. The Crypto Fear and Greed Index currently shows a neutral reading, reflecting divided sentiment over whether a decisive breakout or retracement lies ahead. Asset manager VanEck expects a medium-term peak in the first quarter of 2025, with fresh all-time highs by year's end. It predicts Bitcoin could approach $180,000 during that cycle, while Ethereum might exceed $6,000. Despite lingering uncertainty, the growing probability of a six-figure surge by June underscores investors' enduring optimism in the crypto market. Still, optimism continues to dominate discussions.
For Nasdaq, for those of you who still bother to trade equities, which I know some of you did, it's following the same pattern. It's all like a rerun of the previous Trump. Because he's got the same policies, basically, apart from with the new tech stimulus. So let's go back. Again, Julian talked about this in his presentation, but I want to hammer it home to you. You guys all have PTSD from the last cycle. It finished early. Is it going to happen again? Am I going to lose my money? Am I going to round trip all my gains? Will I die? Will I have to drink Bud Light for the rest of my life? Or can I drink champagne? All of these stories. Blah, 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 blah. The orange zone market goes higher, right? But it didn't really in 2021. Well, what happened in 2021? Oh, the ISM peaked. Do you remember? Raoul told you a minute ago, when the ISM peaks is when you need to be worried. Oh yes, the ISM peaked in March 2020, 2021. Previously, it peaked in January, February 2018. Guess what? That's when ETH peaked. Also 2013. It works every time. And where are we now? Oh, we're at the bottom of the ISM. Oh, how silly of me to be worried about the about the market peaking. For fuck's sake, people. And so, I don't even know what this chart is. Oh, yeah. From the halving, we've only done, is it from the halving or from the low? We've only done an 8x from the low. We did an 85x and a 46x. We only started. Liquidity, as I said, peaked in March 2021. We're now negative currently by this measure of liquidity. If I use the global M2, we're just positive, but we're nowhere near there to be a liquidity peak. As we said, the ISM peaked March 2021. So let's look at it. That was what was happening in March 2021. Look at that. Financial conditions were falling, and the ISM, well, it had peaked at over 60. And let's look at the current one now. You ready, kids? The opposite. It's bottoming. And the green, the financial conditions index, will be going the other way. And the last time it did this, it went up a lot, blah, blah, blah. This is the chart. Again, everyone's like, where's my banana zone? It's failed. It's like the banana zone is a period of time and a price action that is nuanced because it goes in bursts and then corrections. So the banana zone started from September onwards last year. The market came up and did what it did every single time. The correction after banana zone phase 1. So correction phase. Then banana zone phase 2 kicks in and it goes fucking la. It goes bananas. Then guess what? Correction phase 2 fits in. And then we go to the final blow off top. And you've got to be embarrassed. You've got to be embarrassed from all of your complaining when you look at that chart. And look at how small that squiggle is for the correction phase. You've got to be embarrassed. Oh, no, I forgot. You bought AI tokens and they've gone down 90%. I did try to tell you. I gave you the don't fuck this up thesis. If you could follow it, don't use leverage. Generally have 90% of your portfolio in the top, 5 cryptocurrencies of your choice. You're generally fine. You're generally fine. Don't FOMO. Don't do stupid shit. Don't get hacked. Store your stuff carefully, and you'll be fine. But no, most people didn't.
Dogecoin soared by over 7% on February 14 to trade around $0 and 274 cents, propelled in part by growing optimism that a spot Dogecoin exchange-traded fund could win regulatory approval. The recent decision by the United States Securities and Exchange Commission to acknowledge Grayscale's filings for Dogecoin and XRP ETF has stoked excitement about mainstream investment products tied to the memecoin. Investors appear encouraged that this first regulatory step could attract significant institutional capital, elevating Doge's appeal beyond its grassroots community. Risk-on sentiment in traditional markets has added fuel to the rally, with strong stock market performance and signs that aggressive trade tariffs under the Trump administration may soften, easing investor concerns. Technical indicators point to an ascending triangle pattern, hinting at a potential bullish reversal. Buyers have challenged a key resistance level near $0 and 269 cents, and a convincing breakout could send Doge towards $0 and 31 cents in the near term. The accompanying rise in the relative strength index, which sits comfortably below overbought levels, suggests that bullish momentum still has room to run. Meanwhile, on-chain data from Aseri reveals a surge in large Doge address balances, indicating that fishes and whales are actively accumulating. This combination of regulatory optimism and market structure bodes well for Dogecoin's outlook. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.